Today we'll start with the income tax. First we'll start how income tax needs to be computed. What is income tax? If you just look out the word income tax, you will get two words. One is that income and other is the tax. So there are two. One is income and another is tax. Now in this income, when the question income comes, first is that what is the sources of income? So if we go by our natural sense, we'll find normally salary is one of the sources of income. My business may be one of my sources of income. My bank interest may be one of my sources of income. My dividend from shares may be a sources of income. Sometimes I'm getting the gift, that also could be also my sources of income. Sometimes मेरे को भाड़ा मिला, I have a house property, I got some rental income, that also could be my sources of income. Sometimes I got some income by selling my shares or the unit of the mutual fund or selling of my land, selling of my house and flats. So all could be considered as my sources of income. So these sources of income normally captured in my bank statement. So when you will just scrutinize the bank statement, the credit side of the bank statement, deposit column, you need to scrutinize carefully. Because all sources of my income, be it salary, be it business, be it interest, dividend, gift, rent, sale of shares, etc., all will be reflected in my bank statement. So my first step is that scrutinize the bank statement, my deposit sides. Once I have identified the sources of income, then this income I need to classify as per the Income Tax Act. In Income Tax Act, they have classified the sources of income under 5 heads of income. So there is a heads of income. So first we have seen there is a sources of income. This sources of incomes is classified under the Income Tax Act under heads of income. So what are the heads of income? There are 5 heads of income. First heads of income is the salary. Second heads of income is the profits and gains of business and professions. It also in short form known as PGBB, profits and gains of business and professions. Third sources of income is my income from house property. Then fourth sources of income is income under the head capital gain. In short, we call it CG. Fifth sources of income is income from other sources. We call it IOS in short form. So, all heads of income, the 5 heads of income, salary, PGBB, income from house property, capital gain, income from other sources, we need to arrange my sources of income into respective heads. Just like if my sources of income is salary, it will be classified under the heads of income salary. If my sources of income is business, it will be classified under the heads of income PGBB. If my sources of income is interest or dividend or gift, these will be classified under the heads of income, income from other sources, which is IOS. If my sources of income is rent, then it will be classified under the heads of income, income from house property, HP. If my sources of income is on account of sale of shares or unit of mutual fund or land or my house and flat, then it will be classified under the heads of income, capital gains. So in this way, first we need to classify my sources of income under the heads of income. So first step is that we have to analyze the bank statement credit side. From there we need to identify the sources of income. Then we need to allot the sources of income in the respective heads of income. So after allotting the income under the respective heads of income, we need to compute the income. So next step is that computation of income. Now under this computation of income, what we have to do? We have to compute the income under respective head. First head is the salary. So under salary head, we have to compute the income. Now under salary head, how will compute the income? For that purpose, Income Tax Act has given certain provision. So according to that provision, we will compute the income under the head salary. Thereafter, the income under the head PGBB, that is my business income. Again, Income Tax Act provided certain provisions. We have to follow that provisions. Then on the basis of that provisions, we have to compute the business income. Thereafter, we have to compute income under the head house property. Though income under the head house property will compute as per the provision of the Income Tax Act and will captured here. Same way, we have to also compute income under the heads capital gains. That also Income Tax Act provided certain provisions. As per those provisions, we have to compute income under the head capital gains. Thereafter, income under the head other sources, income from other sources. So we also needs to compute our income under the head income from other sources and captured here. So all these incomes we needs to capture and will arrive at the gross total income. So this gross total income, from this gross total income, we are entitled to get certain deduction. So this deduction is known as the deduction under chapter 6A. So this is a big chapter, chapter 6A. We need to study separately to understand which deduction will be allowed from reducing my income from gross total income. So this deduction may come on investment, just like investment on provident fund, investment on LIC, investment on bank fixed deposits, or some expenses like mediclaim insurance premium, etc. So when we will read this chapter 6A in detail, we will get understanding that what are the deduction I am eligible. So for this purpose, we need to check the bank statement. We need to find out from the owner that what are the investment we have made. Then we have to analyze whether these investments are eligible for deduction under chapter 6A. So once we will deduct the eligible deduction under chapter 6A from my gross total income, we will arrive at the taxable income. That is known as the TI, taxable income. So this taxable income is my gross total income minus chapter 6A deductions. So I will get the taxable income. On this taxable income, I have to apply the tax rate. And once we will apply the tax rate on the taxable income, we will compute the tax liability. So my taxable income multiplied by the tax rate will get the tax liability. Now what is the tax rate? There are two types of tax rate. One is the slab rate basis, another is the fixed rate basis. This slab rate is applicable only for the individual and HUF. For others, be it company, be it partnership firm, LLP, they have a fixed rate. So when we will read the tax rate, fixed rate, we will understand that what rate is applicable to company, what rate is applicable to partnership firm, what rate is applicable to LLP. But for individual and HUF, the slab rate will be applicable. Now what is slab rate? This is the slab rate. Slab rate is applicable for individual or HUF. The slab rate is that if the income, what is the income? That is my taxable income. When I talked about the income, that is nothing but my taxable income. Taxable income means my gross total income minus chapter 6A deduction. I will get the taxable income. If my taxable income is up to 2,50,000, then my tax rate is nil if slab rate is applicable to me. If my taxable income is between 2,50,001 to 5 lakhs, then my tax rate will be 5%. If my taxable income is 5 lakhs to 10 lakhs, then tax rate will be 20%. If my taxable income is above 10 lakhs, then my tax rate will be 30%. So when I will apply this tax rate on my total taxable income, then I will arrive at my tax liability. So this liability I have to pay to the government. That means I have to discharge my tax liability. How I will discharge my tax liability? So that is the discharge of the tax liability. To discharge the tax liability, there are three ways to discharge. First is that I may discharge the tax liability by way of TDS. In the previous classes, you have learned how to deduct the TDS. You have seen that if you purchase some things, some expenses, some services, then you need to deduct the TDS. So this TDS is go for the credit to the seller because it is the income of the seller. So this is basically the tax which your supplier is supposed to pay, that you are paying on behalf of your supplier. So this TDS is one of the method of discharge of tax liability. So whatever the TDS deducted by my customer, that will be reflected in my tax account. What is tax account? That we will discuss later on. And this is called a form 26AS, which is available in the income tax portal. So when you will teach the income tax portal, you will understand how this TDS is reflected in my 26AS. So one of the mode of discharge is the TDS. Second mode of discharge of tax liability is by way of paying advance tax. What is advance tax? This is the tax I have to pay during the financial year. You know that we have to pay tax on my income earned during the financial year in the assessment year, for the assessment year. So during the financial year, if we pay any tax, then that is called the advance tax. So there is some certain formula that we will also learn when we will go the learning of the advance tax. So there are the 4 quarters are there where you have to pay the advance tax on the basis of estimation of your income. You will derive your tax liability and you will discharge it by way of advance tax. So I can discharge my tax liability by way of TDS and by way of advance tax. Normally this advance tax and TDS, it should take care of my entire tax liability. But for any reasons, if there is any shortfall, that means my entire tax liability can't be satisfied, discharged by way of TDS and advance tax, then remaining portion I can pay as self-assessment tax at the time of filing of income tax return. But mind it, if there is a shortfall in payment of advance tax, then there are many interests will come. So if I have to pay tax on self-assessment tax, then there may be chances of paying interest due to shortfall in payment of advance tax. So computation of advance tax is one of the important job of a accountant. So accountant should be very careful about the advance tax computation. So in our next class, we will discuss in details how to compute advance tax, how to file the return, what are the deduction available under chapter 6A. So that's it for now.